is just look quickly at going into last week what were perceived to be great charts. Right? Chart number one, great chart, Apple. All right. So Apple, we all know, it just has a product line that's just unbelievable, iPad, so forth. But off of its February low, Apple just took a bath. It went from 250 to 199, 200 in about 6 minutes. Now, I don't know what the story is with that. It bounced back. It's at 235. My sense is that Apple bounced off its 200-day. It will consolidate in here and then roll over and retest this trend line ASAP, which is around 218, somewhere in there. And at some point, it's going to go back down to 200. At that point, Apple will have a problem if it is to remain without a major top. In other words, if it breaks under 190, there's a major top in place, and that will be a multi-month problem that will be worked out on the downside for Apple. Even Apple will not be able to withstand the decline because it will be a universal type of decline, and people will be getting out, even of Apple, because they're afraid. Right? So there's Apple. Great chart. It's kind of been neutralized and could have a problem. Next great chart. We did this, we looked at this on the webinar. Cree, right? I don't know anything about Cree. All I know is that this is one amazing chart, right? But Cree got clobbered, just like everything else. And here's the February low. Took that out. Couldn't get back yet to the prior consolidation area above 70. Looks like that's a lid on the chart. It could rally to 70, but then I expect it to get hit, and I fully expect it to get down here and to test its 200-day again, which will break or be around the same price at $60 that it tanked to last Thursday. So I think there's been some serious damage that's done to Cree, and this was arguably the strongest chart I've seen in this entire period, and we'll have to keep an eye on Cree just to see what the strongest chart does. So Apple and Cree are two to keep an eye on to see what happens with what arguably are the strongest charts out there. Okay, another one that's phenomenally strong was Ford. So let's put up a weekly Ford. Ford, when it last year or earlier this year, when it took out 920, 930, it took off and went up to 14 or roughly 14. Let's see, where did it go to? 1460. This is a spectacular chart, and it has great fundamentals. No TARP, no stigma, blah, blah, blah. But Ford got hurt last week. And fortunately, I thought Ford could trade down lower than it was earlier, and I thought maybe it could test, that 1230 area, 1240 area, and then of course it tanked on Thursday with everything else, got down to 1060. Now, my sense is that Ford is going to loop back down and retest this area somewhere between 1060 and $10. And then I'll take another look at it because I'd like to be a buyer of Ford. But right now, Ford looks like it has unfinished business to the downside, and should it rally, it will have a real problem above $12.30 if it can get there. Chances are it won't, and it'll roll over and retest the low from Friday at, once again, the low from Friday was 1059. So let's just put up this trend line and see what this looks like. Well, if it breaks this low, 1059, given this trend line, then it's going to $10, maybe $9 in a hurry. So Ford bears watching. So you got Apple, Cree, and Ford, three phenomenal charts that are all been damaged. The question is, will they roll over or be bought? My suspicion is that from what I see, they're going to roll over again and will not be able to rally. All right. couple more. Cleveland Cliffs. Another phenomenal chart in the Cree Apple chart, phenomenal chart category. But it really got hurt. It really got hurt. It is a natural resource chart. It got clobbered. Right? So this is the February low, 200-day moving average at roughly $50. My sense is that with the 20 and the 50 having turned down, 63, maybe it can rally a little bit, but it's coming down here for a retest. And if it breaks, it's going back to 40. So Cleveland Cliffs is another phenomenal chart that's been damaged, and I think that rallies will be sold by those fund managers that want to reliquify out of Nat Resources because they're too afraid to stick with the Nat Resources going forward until they think that the dust is settled. Intel, also a phenomenal chart. And Intel was damaged as well. But Intel bounced off its 200-day back above its major trend line. So let's see what Intel can do. I suspect that if Intel gets back up here in the 22 area, that they'll be profit taking, they'll be selling, and it'll end up back here. If it breaks down below the 200-day and Friday's low at 1990, look out, because it's going a lot lower. So that's another damaged chart. It was otherwise a phenomenal chart until last week. And one last chart, Simon Property Group. Now, I really don't know why the REITs should have held up better than anything else, but they did. So this bears watching because I don't understand it. But for whatever reason, this is the February low, and Simon Property Group didn't get anywhere near it, didn't break its July, May uptrend, got down to it, but as long as $78 holds, there's something going on here that I don't quite understand that doesn't look like the other charts. So it bears watching for that reason. And it may be indigenous to Simon Property because it's involved in some, perhaps buying other properties. Maybe its finances are a lot better than everything else. I don't know. But because it's so strong, it stands out to me. And we'll have to see if it can regain 90 or whether it retests 79. And if it does retest 79 and breaks, it's going to be in the same ballpark as everything else, and then it will deteriorate fast. Alright, so let's do 3 more charts and then you're free to go. Alright, let's take the bad looking charts coming into this week. What happened to the bad charts? Well, Freeport-McMoRan, FCX, was a bad chart coming into this week, or a vulnerable chart I should say, and it became more vulnerable. Now what does this look like? Well, to me it looks like Brazil. To me it looks like Brazil, if I can get rid of this. It looks like China. It looks like Germany. But since it's a natural resource,